South Korea just penalized 3 global hedge funds. Previously, we talked about how South Korea actually banned short selling within their markets. On November 5th, they put in a ban until June of 2024 for stock short selling. Now, the FSC, the Financial Services Commission, stated that these funds are alleged to have contravened South Korea's capital market regulations by participating in activities such as naked, aka naked shorting. South Korea regulatory authorities announced fines amounting to 2 billion won or $1.54 million. But wait, we have more to talk about. The ban on short selling may continue. Over to Australia. Chalice Mining Chief Executive Alex Dorsch claims short selling of critical mineral stocks should be banned in the national interest to ensure geopolitical opponents. And he also states in quotes that South Korea had taken exactly the right approach. So are more entities going to stack onto the short selling ban, and will it get contagious over to the US? Let me read you these 2 paragraphs. Now, regulators have the hedge funds in their sightings, fearing a repeat of March 2020, when the bet blew up spectacularly, just before the Federal Reserve had to jump in to resuscitate the Treasury market, aka bail them out. Last week, the SEC, alarmed by the sheer scale of borrowing involved, voted in the rules that may make the economics of the trade less enticing. But regulators are in a bind. Crack down too hard and they could threaten the orderly running of a US Treasury market that's ballooned to $26 trillion since the pandemic. Go too easy and there's the threat of too much financial leverage building up at these hedge funds. The size of the traders' positions means the Fed may have to intervene if they hit trouble again. So regulators are fearing that the same thing is going to happen that happened in 2020. The Fed resuscitating the Treasury market. And they're alarmed by how much borrowing is involved. They are worried that a catastrophe is over the horizon with these hedge funds. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Of course, the intro, we just covered hedge funds, short selling, the ban, how it's spreading, and some additional stuff that we read to you guys. But AMC just made a move, and we're going to talk about it. We have a lot of stuff to cover in today's video. All I ask in return, of course, is to please hit the like button, hit that subscribe button, and yeah, let's get into it. So AMC Entertainment has just made a deal. They entered a private negotiated exchange agreement. As part of this agreement, they will issue 3.35 million Class A shares in exchange for 25 million of 10 to 12% cash/PIK toggle second lien subordinated notes due 2026. The implied value of the newly issued stock is $7.47 a share. So basically, what this means is AMC is giving away 3.35 million shares, Class A shares, in exchange for $25 million. That means they are valuing the shares at $7.47 each, and they are trading lower than that right now. Technically, a solid deal for AMC. Now, there are 13 days left of the year, and the quarter-to-date box office for Q4 is $1.4 billion, surpassing 2022, almost reaching 2021 levels, and we are slowly scaling back up to 2019 levels. So overall, fundamental side of things, doing somewhat well. Now, before we get into AMC's data and AMC's chart, I want to cover GameStop first because the chart is actually making more moves than AMC. 1 million shares available to borrow on GameStop. Call to put ratio expiring in the money, 10,000 compared to 1,000. We are winning on the options chain, as well as plenty of calls expiring out of the money compared to puts. So more people are betting bullish on GameStop. Short exempts still kind of high for GameStop as well, sitting at 37,000. GameStop trading at $17.71, up 0.06% on the day, kind of stagnating right here. And if we take a look at the 4 resquos in January of 2021, this is what we need to see for GameStop, because we are testing the macro trend line. We broke slightly above it. We're testing the top of the Bollinger Bands. It looks scary. It looks like if we get put through another cycle, GameStop is going to flash lower and then AMC is going to follow, right? This is what we have to see. Not this exactly, but notice how it stair steps, okay? We need to see GameStop stair step, and if we don't see that, you could assume it's going to play through another cycle. With that being said, I look for a stair step around 1650. If we retrace to 1650, if we break below, anything under 1450 would invalidate this whole stair-stepping scenario. So again, we would like to see that stair step at 1650, if not 1450. And then if it goes lower, it's getting put through another cycle. AMC, 5 million shares available to borrow, which is a lot, but that is down from 6.2, and then 11,000 calls compared to 14,000 puts expiring in the money. So we are losing on the options chain as well. Out of the money, a lot of premium going to market makers. If you're still betting calls on AMC, it's just not worth it. We can make so much more money together in Discord or on YouTube, betting on other stocks and trading other stocks. So just be very, very careful with this. Also, short exempts still always high on AMC. they are holding this thing down, and they need a lot of liquidity. They need a lot of leverage to hold this thing down. Short interest, according to Ortex, 8.8% of free float. We know it is much higher, but that is what is reported as of right now and what we have to pay attention to. Now, AMC, yesterday's video, I said if we break below 660, you can expect it to make a new low. We broke below 660, trading at $6.58. Kind of got a bounce at 652, but we sold a little bit below, coming down to 651. And the bottom is about $6.47, $6.48 on AMC. So just be aware that that new low could get hit. Okay, just watch these levels, watch for a new low on AMC. Best case scenario, we flash down and then we have the major rip that we're waiting for. Watch Ethereum Classic as well as XRP and the overall crypto space. Now, another money market instrument failure, Deutsche Bank. Reasons they failed: net asset value falls below $1. Parent company bailout, forced liquidation, segregating bad assets, failure to comply with investment policies. Boom, another one bites the dust. This is something to pay attention to right here. Keep track of what we cover day in and day out in these videos. Another sprinkle on top for the banking system. China's banking system is basically in a free fall, and the country's real estate losses could hit $4 trillion. Now, the inflows and outflows coming into the market is something we have to talk about before we touch on the charts. But before we get into that and some additional stuff, guys, make sure to join the Discord. The link is right under the video. Cheapest Discord on YouTube, best Discord on YouTube. I'm in there on the daily. Come talk with me. Come talk with the most amazing people, stocks all day long, as well as crypto. Everyone in there has the best vibes. We are all trying to become financially free. So yeah, press the link in the description or pin in the top comments, watch the trailer, and think about joining. Also, 5.1% APY on your uninvested cash, as well as 15 free stocks for doing absolutely nothing. Use my link, sign up for Moomoo, and make a deposit of any amount. And if you've done it already, tell your family member to come over to the video, press the link, and get their free stocks. All you have to do is sign up and make a deposit. It can literally be a penny from your bank account. And Moomoo keeps your money insured, gives you level 2 order book data, access to trading options, going long, going short, and more. Now, investors pulled out $5.2 billion from the QQQ NASDAQ 100 ETF on Friday, which was the biggest one-day outflow since the dot-com bubble peak in 2000. The NASDAQ 100 fell 70% over the next 2 years after that. Do you think the same thing is going to happen? However, what is so interesting about this is we really don't know the direction, and the reason for that is because on Friday, at the same time, the S&P 500 saw the biggest single-day inflow on record at $20.8 billion. So did they shift money from there over to the S&P 500? But that's not all. Dating back to the ETF's inception of 1993, this has never been seen. Plus, total outflows last week alone hit $24 billion, also posting a new record. And yesterday, SPY saw another $10 billion of inflows, putting the total at $35 billion since last Monday. $35 billion in 6 trading days, or $5.8 billion every single day into the SPY. The Santa Claus rally is absolutely an understatement. You guys let me know what you think about this in the comments down below. Now, touching on the SPY, trading at 475.10. SPY is coming up to 477.50. and then potentially 480, but 477.50 is the level I'm watching. I am still sitting in my calls on the SPY. Overall, looking good. If we sell off, watch for a hold at 472.55. We break below 468.50, and it's that simple. Tesla, still in my calls. I am completely relaxed on this play. We are up a good amount on these calls, trading at 257.15. Coming into 2024, I expect this thing to fly, and I am just extremely confident in Tesla. A couple additional things. Donald Trump has been disqualified from running in 2024 according to a Colorado court, which is absolutely nuts. And the SEC is basically guaranteeing the BlackRock ETF meeting with them for a 5th time. They are negotiating things to get everything in order to drop this thing on January 9th. Speaking of crypto, Bitcoin finally broke back higher, fighting that next level at 44. So it broke above that 42 wall and now is fighting that 44 wall. Next leg up, watch 46 on Bitcoin. This is also going to positively affect Mara as well as Riot, these mining companies trading at $22.78. And what did we say, guys? If you've been following the channel, you would have made money on this. A break over 19 is gonna bring us to $24 to $26, and that is where I would look for an exit temporarily. Broke over 19, flew to $24.27, dipped our toes in this box, and we are slowly getting this retracement. Absolutely amazing thing to see. We are still in Riot on the trading challenge. However, we do have a stop on Riot. We ended up getting out of Carvana because we put a stop in on Carvana, making about a 60% gain on Carvana. So that is beautiful. As for Riot, we are still in, up 5.31%. on the last 4 shares, but the first 8 shares that we had, we were up about 7% on. So Riot doing well, and we do have a stop on Riot. Want to know the stop? Check Discord. Also, if you want to know my trades as soon as I take them and be able to press copy and just enter these trades for the challenge, watch this video, go down to the third link in the description, follow me on Frenetically, and you can join the trading challenge. I'm trading with a $300 account that Frenetically funded themselves, but if you were trading with a $30,000 account, you'd be up 30% on that account in the past 2 weeks. Overall, savage. I am going for percentage gains, and if you want to follow me, come follow me. That is it, guys. Make sure to follow me on TikTok, Instagram, as well as Twitter. I love you all. Lottery Stocks out.